Hey everybody, sorry I couldn't hold a class meeting tonight. Had a number of people email me for just with questions about some of the problems in the quiz access and in the quiz. So I just thought I would try to talk through them real quick and see if that helps. So the first one someone brought up, they wanted me to look at is problem number 5 on the quiz access. So I'm assuming that means the chapter 4 quiz access, since that's the one that we're working on this week. Anyway, so this wants us to prepare the journal entries to record the following transactions. And so we're looking at this in preview mode. I'm going to look at the required information here. Let's see, is it going to give us all of that? Let's see, I guess all the information's up here. Maybe we can scroll it down. So 4 and 5 are kind of taken together. And in 4, we make the journal entries to record the May transactions. We're a retailer that uses the gross method and a perpetual inventory system. And then in 5, we're preparing the journal entries following transactions for Allied, assuming they use a perpetual inventory system. So, all right, I'm trying to see if there's a place I can put this or we can use it, or if it's just going to be in our way. All right, so on May 3rd, so we're doing the entries for Allied on number 5, right? And Macy on number 4. All right, so on May 3rd, Allied makes its first and only purchase of inventory for the period of May 3rd, 1,000 units at a price of $8 for a total cost of $8,000. And it tells us that we're paying cash. So we're just going to debit merchandise inventory, 1,000 times 8 or $8,000, and credit cash. So our inventory assets going up and our cash assets going down. On May 5th, Allied sells 500 units for $12 per unit. So a total of $6,000 to the Macy Corporation for credit terms of 210 net 60. The goods cost Allied 4,000. So this is important. When we're the seller, we have to do, whenever we're selling something, we have to do 2 entries. We have to do an entry to record our cost and the deduction or reduction of our inventory, but we also have to do an entry to record the revenue we've earned and either an increase to our cash if we're being paid cash, or an increase to our accounts receivable if we haven't yet been paid. So typically, it's not required, but typically you enter the retail transaction first, meaning the sale to the customer and the money you're bringing in from that sale. So here we're going to debit accounts receivable. Because we have these payment terms, it means that it's a credit term, okay, that they're not paying us cash. So we're gonna debit accounts receivable. So the asset accounts receivable is going up, and we're gonna credit sales, which is a revenue account. So the sales revenue account is also going up. Then the second part of that transaction is the cost. So we're gonna debit cost of goods sold. That's an expense, $4,000. And we're going to credit merchandise inventory, showing this inventory is leaving us, and so our assets going down and going to the person who's buying it. On May 7th, Macy returns 50 units because they did not fit the customer's needs. Allied restores the units, which cost $400 to the inventory. So again, when we have a return like that, we have to do 2 entries to deal with that. The first, again, is we're going to debit sales returns and allowances, and then we're going to credit accounts receivable. So if you think about it, accounts receivable is an asset. So by crediting it, we're reducing our asset, and also that's reducing the amount we expect our customer to pay us later. And then also we have to do this cost entry where our merchandise inventory is going to go back up. So a debit to merchandise inventory, and then our cost of goods sold is going to go down, or a credit to the cost of goods sold. And again, about the only time we ever would credit an expense is a case like this, where we're we're refunding money to someone, or in this case, they haven't paid us, so we're just reducing what they owe us. On May 8th, Macy discovers that 50 units are scuffed, but are still of use and therefore keeps the units. Allied gives a price reduction or an allowance and credits Macy's account receivable for $200 to compensate for the damage. So again, we're just going to debit sales returns and allowances, and then we're going to credit our accounts receivable. Sales returns and allowances is an interesting kind of account because it feels like an expense, right? We're debiting it each time we have this return or allowance. Really, though, it's a contra revenue account, okay? And what I mean by that is it's offsetting the amount of sales, which is our revenue account, for any returns and allowances. And so though it acts a lot like an expense, it's a little bit different, even though it has much of the same properties. Finally, on May 15th, Allied receives payment from Macy for the amount owed for the May 5th purchase. So this is the toughest one, right? Because we have to figure out how much they owe us at this point. And so what I would do is I would say, well, I would just work the accounts receivable. So on May 5th, we have a debit to accounts receivable of $6,000. And then we have a credit to accounts receivable. So now they owe us $5,400 would be our new debit balance after that. And then we have another credit of $200. So now they owe us $5,200. And then we're going to apply the discount to the amount they owe us. So if they owe us $5,200, we know that our accounts receivable will have to go down by $5,200 because they're paying us. So we'll credit accounts receivable $5,200. And then we know that there's a 2% discount. So 2% of 5,200, which is 104, is the amount that we will debit sales discounts. And the difference, right, the amount we're actually going to get paid in cash is 5,096. So there's a couple ways to go about this. Some people will take the 5,200, multiply by 0.98, and that gives them the cash amount, and then multiply by 0.02, and that gives them the amount of the discount. Other times people will just multiply by 0.02 to get the amount of the discount, and then just subtract the discount from the accounts receivable, and that will give the amount of the cash payment. You can do it whichever way you want. All right, so there you go. There is number 5. I hope that was helpful. So let's take a look also at numbers 9 and number 10. Those are the other two that some people had asked about. All right, so on number 9, it's giving us a bunch of income statement information and then asking us to fill in the blanks. And so really what they're trying to do is get us to recognize sort of the interrelationship between each of these. I think the person, well, we'll just kind of go through it. So here's what I have to know. Okay, first, sales minus cost of goods sold gives me gross profit. So there's our first formula, if you will. And then gross profit minus expenses gives us net income. And then cost of goods sold can be figured out by our beginning inventory plus our merchandise purchases minus our ending inventory gives us cost of goods sold. So now that I know all those, I can sort of look at these problems and fill in the blanks. And so, for example, you can see here we were missing merchandise inventory, we were missing gross profit and missing net income. And so if I know my cost of goods sold already and I know my sales, then I can easily just say cost of goods sold sales minus cost of goods sold is gross profit. And then if I have gross profit minus expenses, I can find net income. The only one that's kind of tough is I've got to figure out merchandise inventory. And even that one, if I know my beginning inventory plus purchases minus merchandise inventory gives us cost of goods sold, I can just figure that out like algebra, right? 8,500 plus 3,700 minus X equals 33,600. And then I just solve and I can find 11,830. And then it's really the same process for each of these. I just have to take a look at what I'm missing. Again, I was missing gross profit, but I have cost of goods sold, so I can just take sales minus cost of goods sold gives me gross profit. And then I was missing total cost of purchases. And I know that beginning inventory plus purchases minus ending inventory equals cost of goods sold. So I can say 16,440 minus X plus 2,400 equals 18,000, solve for X. And again, we use the same process on each of these. I think that's probably sufficient. I guess if you still have specific questions after me kind of walking through that, like let me know and I'll give you a hand. And then on to number 10. So on number 10, we have acid test ratio. And so our acid test ratio is our quick assets divided by our current liabilities. And our quick assets are typically our cash, our short-term investments, and our current receivables. That's what we're gonna call our quick assets, okay? So in the case of Camaro, we're gonna have cash plus current receivables, but we have no short-term investments, so that's gonna give us 2,250 divided by the current liabilities of 2,100 gives us 1.07. Here we have 170 plus 450 gives us 620 divided by the current liabilities gives us 0.49. And then on the Torino, we have 1,100 plus 500 plus 650 gives us 2,250 divided by the current liabilities of 3,250 gives us 0.69. And so what's important about this ratio, why we use it, is it gives us a sense of how liquid a business is. And by liquid, we mean how much percentage of their short-term, I guess, what is their short-term assets in relation to their short-term debt? Do they have enough debt enough assets to pay off their debt, right? If you had an acid test ratio of 1, it would mean that your quick assets equaled your current liabilities, which would mean you would have just enough current or quick assets, not even current, but quick assets to pay off those current liabilities in the next year. If it's less than 1, it means you're depending on your ability to earn money between now and when those liabilities are due. And that's not a great place to be. And certainly lenders like this ratio is certainly not a person we want to lend money to because, well, the danger that they won't be able to pay us back. And then number 2, it says which company is in the best position to meet short-term obligations. And it's the one with the highest acid test ratio. So in this case, it's Camaro. Okay, so those are the questions that people had emailed me about on the quiz access. And then one more, someone wanted me to take a look at number 6 on the actual quiz. So let me do that real quick. So I'm going to go back home. And then we'll look at chapter 4. And we'll look at the quiz. And we'll look at number 6. Maybe we will. All right. So number 6 says, prepare journal entries to close the balances in our temporary revenue and expense accounts. Remember to consider the entry for shrinkage from question 411. Well, that stinks. Do we have that information? Let's take a look at it. So we have all of these different accounts: merchandise inventory, retained earnings, sales, sales discounts, and so forth, okay? So the accounts we need to close are our sales revenue, which is just called sales. So that one will close, right? If it's revenue accounts, will have a normal balance of a credit. So to close it, we'll debit that account, and then we'll credit income summary. But then to deal with our sales discounts and returns and other things, we're going to have to deal with all of these expenses. So let's see. I've got sales discounts. I've got sales returns and allowances. I've got cost of goods sold, depreciation expense, salaries expense, and miscellaneous expense. And then I've got this little kicker right here. A physical count of inventory on July 31st discloses that the cost of merchandise or inventory still available is $38,450. But when I look at my inventory up here, it says $39,800. So I've got to do an adjustment. And I think that's what this little, remember to consider the entry for shrinkage. Okay. I've got to do an adjustment to bring my actual, my inventory account in line with the physical count. We typically do this periodically, sometimes monthly, quarterly, depends on the size of the business. When you see people at Walmart with these little handheld scanners, what they're actually doing is they're out there counting up the number of items on the shelf and then scanning the barcode, and then the system is sort of recognizing the difference between what the physical count told us and what the system says we should have. So we have to make this adjustment for shrinkage, and shrinkage means any loss of goods. It could be through theft, through spoilage, through breakage. And so in this case, we count up, we have 38,450 in inventory, but our account says we have 39,800. So I'm going to do 39,800 minus 38,450. And that's going to be the amount of our shrinkage entry. So 39,800 minus, what did I just say? 38,450. That's $1,350. And our shrinkage entry is always going to be a debit to cost of goods sold. So it's just an expense called cost of goods sold, and a credit to merchandise inventory, because we're reducing the amount of asset. We're bringing the asset down to what our physical count was. So I know that my cost of goods sold, even though it's 106,200 here. Oops, I just forgot what my plus 1350 is actually going to be 107,550 before the close. Okay, so I think that's probably getting people, because that's an extra wrinkle this problem threw in. All right, so now I'm just going to debit sales discounts 3,300, because that was the balance, and I'm going to, credit. Sorry, these have debit balances. Okay, so I'm going to credit sales discounts, credit sales returns and allowances 6,100. Credit my cost of goods sold 107,550, which was the 106,200 plus the 1350 adjustment for shrinkage. Credit depreciation expense 10,700. Credit salaries expense 34,500. Credit miscellaneous expense 5,000. Add all those up, and I'm going to debit income summary the same amount to close those accounts. So I hope that's helpful, because that is a tough one. So I'm glad someone brought that one up. I hope those help. And again, sorry we couldn't have a meeting tonight, but good luck on the rest of the assignment. And again, if you need me to help with something one-on-one, don't hesitate to reach out, and I'll do my best to get together with you and get you some help. Have a great night.